So I want to talk about payroll, right? And how it relates to paying yourself and or others, or in a lot of cases for strategy for my business owners, your children, right? A lot of parents own a company and they want to pay their children. It's important that you actually hire a payroll company. Okay. If you are paying yourself, that means you are an S corp, right? LLCs and sole proprietors, you're not allowed to pay yourself as the owner. You have to designate S corp, and you can only designate S corp if you can afford to pay yourself a reasonable salary, which is determined by the comparison of other businesses in your industry with like sales, right? So if you make 100,000 and somebody who is another entity that makes 100,000 and they do a whole analytical uh, formula of what the industry says is reasonable for those sales, that's what you should be able to pay yourself. If you can't afford to pay yourself on these benchmarks, you should not S corp. Okay. And I talk about S corp and revocation on my YouTube. Go ahead and subscribe to my YouTube. But if you are an S corp and or you're hiring your children and you're not an S corp, either way, you need a payroll company. Okay. It makes sense because with an S corp, if you're paying yourself and you have to pay yourself a salary, right? If you're an S corp, or if you're paying your children in any other entity, including an S corp, you have to have a payroll company. You have to pay payroll taxes, right? You have to remit taxes on behalf of your employees, in this case, your children, and whoever else you're hiring, right? A lot of people use children as a strategy. They pay them up to the standard deduction, and the children have no federal income tax withheld, but they still pay Medicare and Social Security taxes, right? If you pay your children from your bank account, right, from your business bank account to their account, that would be a 1099 because no employer taxes are coming out, no employee taxes coming out, and they're subject to self-employment tax. Self-employment tax is a sunk cost, right? You cannot deduct self-employment tax unlike employer taxes. You can deduct the amount of taxes you pay for payroll on the employer side, right? That's your 940, 941s, annual and quarterly payroll taxes. That is done for you through the payroll company. You don't have to worry about any of that if you hire a payroll company and pay the monthly fee. That is also tax deductible. Same goes if you're an S corp and you pay yourself a salary. You have to have the appropriate taxes withheld and remitted to the government. Again, done through a payroll company. If you remove money from your business bank account and simply just transfer it to your account, that is not payroll. That is an owner's draw. Okay. How that affects your taxes? Nothing really. You're going to report all the income that your entity made, your operation, your business made, regardless of how many owners draws you do. Yes, you do have to report it, but the tax will be the tax on all income made. So whether you do 10 owners draws or 5 owners draws, you're still going to pay the tax on all income anyway. So just an important note, please, please, please hire a payroll company. Even if you just hire contractors, hire a payroll company, let them prepare all the 1099s, let them pay all the employer taxes for you, remit all of the taxes on behalf of your employee for you. Employer taxes are not a sunk cost. You get to deduct them and reduce your business's taxable income. Payroll is not a bad thing. In fact, it's probably best that you hire a payroll company, whether you have contractors or employees or both.